In this presentation, we're going to enter our first transaction, the issuance of common stock for the corporation. For more accounting information and accounting courses, visit our website at accountinginstruction.info. This is going to be kind of like an investment to the corporation from the shareholders by purchasing stock. In order to do that, we're first going to clean up our worksheet a little bit to make it as easy as possible. We're going to enter this information here into our general journal and then post it to the general ledger. Now we have two sets of journals here. We have another tab. If we scroll over just a bit, I'm going to remove or hide these columns so that we can have as little data as possible on the screen, because this is of course a large worksheet and we want to be able to move around on it as easily as possible. So what I'd like to do is hide these for now, these columns G through K. To do that, we're going to put our cursor on the G, so you see this drop down, left click, and scroll over to K. Then let go of that selected area, put our cursor on the selected area, right click, and hide. So we'll hide all that selected area, and there we have it. So now we're going to enter this data here into the general journal. We're going to post it over here to the general ledger. So here's the general ledger, and then the general ledger will be used to create the trial balance. Sounds complicated. It's not too bad if we take it on a step-by-step basis. If we look at our trial balance, we see that we have kind of a chart of accounts, which is always in order. We have the assets in green, we got the liabilities in orange, we got the equity in light blue, and the income statement, revenue and expenses, in the dark blue. We're going to represent the debits with positive numbers, credits with negative numbers, that allowing us then to see that this green 0 will easily show us that we are in balance as we go. We will check that we're in balance each step along the way, so we're not going to do the whole problem and then go back, realize we're out of balance, and have no idea where to go to fix it. That's what we want to avoid. So in order to avoid that, we will go step by step and check that we are in balance with each transaction, and that'll make it a lot easier going forward and give us a good idea of exactly what we're doing at the same time. You'll note that the trial balance is in order: assets, liabilities, equity, income, and expense. The general ledger is in the same order, so it just gives more detail. So now we're going to show the detail for all the cash. We're going to show the detail for all the accounts receivable. We're going to show the detail for all supplies. However, we still have all the assets in green, the liabilities in orange in the same order, and then the equity, and then income and expenses. So once we know that ordering, really easy for us to just go back and forward and try to pick this information up. So now we're just going to enter this first journal entry. Here's our data on the left. We're going to say it happens on 1-1. So we are in cell B5. I'm just going to put 1-1. And it's already pre-formatted to be in a date format, so we don't have to do anything to it. It's already in a date format. You'll note if by checking over here, home tab, numbers, it's in a custom format. So I made it a custom date, not to show the year. You can see the year up here, but I want to remove the year so we can have it in any year and it will still be okay. So it's just 1-1. Okay, so now we're going to have this information. We're going to issue the stock. So we're issuing stock. What happens when we issue stock is, in essence, we're getting an investment from the owners. So we're saying, here's an equity investment in the company. To the owners, we're going to give you voting rights. We're going to give you rights to the dividends of the company and some claim to the net value, the equity of the company, in exchange for something in value, typically cash. So that's what's happening here. This is different, note, than us buying and selling stock on the stock exchange typically, because when we buy on the stock exchange, we typically buy from some other trader, meaning we're not buying from the company. We're buying parts or ownership of the company, but not from the company, from somebody else. Here, we're doing the initial offering, which means we are buying into the actual company. So, and again, no matter where we buy the stock from, it represents value of the company. It's just that that value was held by some other stockholder, usually when normal stock trades happen, if it's on a public exchange, rather than the case where the company itself is making the distribution of the stock. The beauty of the stock is that they're all the same, so they're easy to trade. And so that's going to be the key point for the stocks. So here's our data. We have shares that we're going to issue 4,000. Par value is $5. Amount received per share, $20. And the number of shares, and then we're going to issue equipment. Number of shares for equipment, 2,000. So let's start off with the cash transaction. So first question, is cash affected? Yeah, we're going to get cash because we're selling stock, going to receive cash. Cash has a debit balance. We need to make it go up. So we're going to do the same thing to it, another debit. So we're going to increase cash. I'm going to put my cursor on L5, right click and copy. I'm going to put that in C5, right click and paste. Not this one. I don't want to really make it green. I'm going to paste it 1, 2, 3, which is the values only. Now, of course, you could type in cash. I'm going to copy and paste every time just so I don't misspell anything. I'll still probably figure out a way to misspell something, but I'm going to copy and paste every time here. And then we're going to say, how much did we get? Now, this is kind of the tricky part because there's a couple different numbers that are given here. We're selling 4,000 shares, par value 5, amount received per share 20. How much did we get? We're selling it for whatever we can, 20. The par value is just going to be a placeholder. So the money we got is 4,000 times 20, or 80. So I'm going to do that here with a formula. This equals 4,000 times 20. So there we have that. Now we're issuing, just like we would for a sole proprietor, some portion of equity. Equity down here, if we're used to partnerships or sole proprietors, may look a little bit unusual. This is the difference between the types of companies. Here we've got common stock. That's what we're issuing now. Additional paid-in capital, dividends we'll talk about later, and retained earnings. Basically breaking out the portion that is being invested, what we're doing now, versus the portion that has been accumulated through revenue and not yet distributed in the form of dividends. Hopefully that'll become a little bit more familiar as we go. If we think about the equity section as a whole, it's basically the same, whether it be a sole proprietorship, partnership, or a corporation. The difference being where how we're going to break out that equity between ownership, between, in this case, the stockholders. So we got common stock. Note, equity is always a credit balance account representing us, owing us something to the owners. We're going to make it go up by doing the same thing to it, a credit. So I'm going to copy the common stock, put that in C6, right click and paste. Not the first one, but values only, 1, 2, 3. Now we're going to put our cursor in the credit side. This is going to be a credit, but we're not going to use the same number here because we're going to put it on the books at the par value. So that means it's going to be the 4,000 times 5, the par value. So why would we do that? It's going to standardize the common stock. So whenever we see something in common stock, we know that if we see 20,000, we can divide it by 5 and get the number of shares really quickly. It'll standardize the number that is in common stock. So to do this, I'm going to put, instead of equals, negative, because I want to make it a negative, 4,000 times 5. There we have it, 4,000 times 5. You could just put a negative 20,000. I would like to use formulas whenever possible. And then we're going to have the difference, 80,000 minus 20,000. I'm going to do that with our negative plug formula in order to get what we need in order for the debits to equal the credits. This will be done with a negative instead of equals, SUM. It's just the sum function with a negative in front of it. Double click the sum, and I'm going to highlight from the 80 to the 20. So it's highlighting the whole box here. So D5 to E6, sum D5 colon E6, enter. And that'll give us the 60,000, the 60 and the 20 equaling the 80. Again, you could just type in a negative 60,000. I like to use formulas whenever possible. Okay, and then that's going to go, where is that going to go? If we scroll down, it's part of equity again. It's part of it now going to additional paid-in capital. So these two accounts really represent what has been invested. This being a set fixed value at par, this being whatever happens to be over that par value, because we're not going to sell something just for a par value. That's just a placeholder. It's almost always going to be higher what we sell for, and the amount we sell for will change with the market. We'll sell for as much as we can. And so that's what we'll do. So we're going to credit this. I'm going to copy this, right click and copy. We're going to put that in C7, right click and paste, 1, 2, 3. Now I'm going to format these. This probably is formatted already for you, but I'm going to format it here. If you can't format it this way, you can just double click in the first cell and hit the space bar. but because the cell could be locked for this type of formatting. But you could go to the Home tab, Alignment, and Increase Indenting. And that's a way for us to get us a nice little indentation without having to use the space bar or without having to have a bunch of different cells that we use for the spacing. Okay, so this is our journal entry. We're gonna post it now to the general ledger. So here's cash up top. It's gonna be in the same area on the GL. What I'd like to do is I'm gonna try to save our scrolling a little bit by using the freeze panes function. So what I wanna do is scroll to the right just a little bit so that we have this area flush with the side. And then I wanna keep this from not moving every time. You don't have to do this, but it could make things easier, so that's what I want to practice maneuvering around Excel. I'm going to put my cursor right here in F1, and then go to the View tab, and then go to Freeze Panes, and then we want to freeze the pane. And what that'll do is, like, when we go to the right, notice these cells, B through E, are not moving. So I can easily go back and forth from these cells to whatever I see over here, and that could be useful. Note that you want whatever you see here when you freeze it, if you had these cells open, will give you less of a window on this side, less of a window to scroll through and see. So that's why I want to see just these cells, starting with column B to E, and that'll give us as much space as we can. So here's the first item, cash. Here it is on the trial balance. First item on the general ledger as well, of course. We're going to be on the debit side. So on the debit side for cash, we are in cell 09, where we will say equals and point to that 80,000. That's going to bring the balance up from 0 by 80,000 to 80,000. We could see that that's going to have the 80 all the way down, and of course that brings it over to the trial balance as well. And the trial balance is now out of balance. Debits do not equal the credits because we haven't finished the journal entry. So that's how this worksheet's going to work. Then we're going to go to the common stock. Here it is on the journal entry. Here it is on the trial balance. It's going to be the same order: assets, liabilities, the first equity account. So if we go to the general ledger, here's our assets, here's our liabilities, here's our equity. So the first equity account's down here. So we want to be in AB 28. And if we scroll up, we're picking up this 20,000. So we just got to scroll around a little bit. We're in AB 28, common stock credit side, equals. And it's really best to use you could just type in the numbers here, but formulas are far better because it allows us in this area, because it allows us to see mistakes oftentimes. So if I scroll back up and pick up this 20,000 and enter. Now, if something's out of balance, now that's 20,000 here. If I scroll to the right, we can see that 20,000 is now picked up in common stock here. We can see that the assets minus the liabilities are that, and we're at 60,000 out of balance. Now, if we're out of balance and we didn't know exactly why here, the fact that we have formulas really helps, because I know this is in balance. This has, debits minus credits equals 0. I can say, where is this going? We can go, and I use these items, which can be found in the formulas. They may not always be there if the worksheet is protected in some way, but just know where they are, because you can use these to say, where's that going? It's going right there. Where's that going? It's going right there. We can see where they're going, and then we could say, well, where's this one going? And we go, it's going nowhere, right? So that's what we're off by, clearly, is the 60,000. So if we don't use formulas, we can't do that. If there's more than one journal entry throwing us off, and we can't see it's 60,000, it's two things that are off, then this type of journal entry and the use of the formula is really helpful. Okay, so then I'm going to remove this, which is here or here, and then we're going to post the additional paid in capital. Here it is there. Here it is, and additional paid in capital is here. So it's our second equity. So I'm going to scroll to the right, assets, liabilities, equity. It's going to be up a little bit, and we want to be on the credit side. So notice I can see the pane over here, and I'm over here in AF9. So we will say equals, and then point to that 60,000, bringing the 0 up by 60,000 in the credit direction to 60,000. Now I could scroll to the right to go see the trial balance. If we put our cursor right to the other side of these panes, however, and then just scroll to the right one more time. I could have scrolled all the way to the left, but if we go for the cursor right to the left of the panes and scroll right, then we can get there really quickly. And we see here's the 60,000 that pulls over. We're now in balance, so meaning the debits equal the credits. And that's going to give our check. That's why it's very nice for us to enter the journal entries in this format and be able to check each time we enter the journal entry. So we can see we have it here, we posted it here, we've got the cash going up, and we've got the amount that is owed to the owners, the stockholders, going up as well, in a similar fashion as we would for sole proprietorship or partnership, except for these accounts would then be just capital accounts for sole proprietorship or partnership. Here it's just saying common stock because it could be going to whoever the stockholders are. We don't need to label who the stockholders are. They're all the same. Whoever happens to be owning whatever shares of stock has an equal value, an equal claim to these assets. So that's what we have here. And of course, we're in balance, no effect on net income. Okay, so we're going to scroll back to the right. And in order to do that, I'm going to have to unfreeze the panes so that I can go back to the right here and post the second part. So I'm going to go to the View tab. We're going to go to the Freeze Panes. And just note what I'm saying here. I can't get back to cell A. If I scroll to the right, I can't see cell A because we froze the panes. So now I'm going to unfreeze the panes so we can go back to cell A. So View tab, Windows, Freeze Panes, and unfreeze the pane. We have to be able to take a look at the pane in order to deal with the second piece here. So on 1.1, second one's going to be that we issued equipment. We issued 2,000 shares for equipment. So note it's usual that we're going to get cash for the shares, but it's possible for us to receive something else, some other form of payment such as equipment for shares of stock. So it's going to be the similar thing. Instead of getting cash, is cash affected? No. What did we get? Equipment. So equipment's on the books as an asset. We're going to make it go up by doing the same thing to it, which is another debit. So we are in L10. I'm going to right click and copy. We're going to go over to C9, right click and paste 1, 2, 3. Then we'll put that equipment on the books for 20,000, the value of the equipment. Now note we'd have to basically find what we believe the value of the equipment is in this case. We'd have to figure out the market value. This is kind of like a market value transaction because there's a trade happening here, our value of this corporation in exchange for the equipment. Now we're going to have the other side of it. What are we issuing? Once again, we're issuing the common stock. So we're going to scroll down, common stock here. That's what's going to increase. It has a credit balance. We're going to make it go up by doing the same thing to it, another credit. So in L16, we will right click and copy. We'll put that up top in C10. Right click and paste 1, 2, 3. What will the credit be for? Not the 20,000 necessarily, because it's going to go on the books at the par value, remember. So the par value is going to be the $5 for how many shares? 2,000 shares. So let's do the math here just in Excel by saying negative $5 par value times 2,000. Why negative? Because I'm just going to flip the sign here and make it a negative for a credit for us to use within this worksheet. And enter. So there's the 10,000. And we're not in balance, of course. 20,000 is greater than the 10,000. We're going to need another 10,000 to be in balance. I'm going to calculate that by doing our plug formula, which is negative sum. The sum function with a negative sign in front of it. Double click and highlight the 20 to the 10, the D9:E10, and enter. Now we just need to know where that's going to go, and it will of course go to the additional paid in capital, the amount paid in excess of par value for common stock. So we're going to copy L17, right click and copy. We're going to put that in C11, right click and paste 1, 2, 3. And then I'm just going to indent these one more time, probably done on your worksheet already, but if not, we go to the Home tab, Alignment, Increase Indenting. You don't have to indent, but that's a nice little feature just to know about. If that doesn't work, or for formatting, you can just double click on it and hit the spacebar, of course. And that'll another way you can indent, which isn't quite as cool as this one, but whatever, it works. Okay, so now we're going to post this out. So once again, to do the posting, we want to freeze the panes. So I would rather not see this over here to freeze panes because I want to see as much on this side of the screens as possible. And obviously you don't have to freeze the panes either. So if you don't freeze the panes, that just takes more scrolling to go back and forth. In fact, let's do that on the first one. I won't freeze the panes. We're going to go to the equipment here. Here's equipment on the trial balance. So it's like 1, 2, 3, 4, 5, 6 accounts down. So we're just going to scroll to the right, find that over here. Here's equipment. So it's down the debit side. So we're in cell W9. We could just type in the amount here, but we want to use formulas. So the easiest way to do this if you're not freezing the panes is to say equals. And then I just scroll left. Scrolling to the left with my arrows until I get back to where I want to be. I'm on the last journal entry. I want to pick up this equipment here, D9, enter. So if I scroll back over here, you can see here it is. There's the D9. You could just type in D9 if you can remember that cell. And then that'll be the 20,000, which pulls over here to the trial balance. And of course, we're now out of balance by 20,000. So now we're going to do the other side, and this time I'll freeze the panes. So to freeze the panes, I want to be all the way to the top, and I'm going to be all the way to the right, so the B is flush. This column is flush, and then I'm going to put my cell on F1 in order to freeze the panes. And then go to the View tab, Freeze Panes. We're in the Windows group, Freeze Panes, and freeze the pane. No more pane, it's been frozen. And then we're in Common Stock is here. On the journal entry, here's common stock on the trial balance. So it's going to be the first equity account, same over here. So we're going to scroll to the right till we find that common stock, assets, liability, equity. Scrolling down, here's common stock. We want to be on the credit side, so we're in AB29. Within AB29, we're going to say equals, and then we're going to scroll to the right just a little bit. Actually, we don't need to scroll to the left, and then scroll up because we have the frozen panes. And we just want to pick up the common stock. So here's the common stock. So that's in E10, enter. So again, if we double click on it, you can see it's in E10, enter. It's in E10 up here. You could just type in E10. You could type in negative 10,000, but formulas are preferable. Then if we go to right to the left of the frozen panes and scroll right, it'll pop back over to where we want to be. We're out of balance by the 10,000 until we report the last part here. And we can see that this 10,000 has increased the common stock, meaning it's made up of this 20 plus, I'm holding down control, this 10. 20 and the 10 adds up to that 30. So then we're going to go to the additional paid in capital. Here it is on the trial balance. We're going to find it on the general ledger, same order, second equity account. Here's our assets. Here's our liabilities. Here's equity. There's additional paid in capital. We want to be in cell AF10, where we will say equals and point to that 10,000, bringing the 60,000 balance up by 10,000 to 70,000. So we can see that 70,000. If we go right to the left of the frozen panes and scroll right, it'll pop back over there. There's the 70,000, and there's our two journal entries for equity. So we can see what happens. It's just like any type of investment. Owners put money into the company. We now have cash. We now have another asset as part of the payment for the equity investment, and then we owe it back in the equity section. Rather than listing out capital accounts of who we owe, we're just going to list out common stock and additional paid in capital. How do we know who has claim to these assets? We know by them owning stock, and however many stocks they have represent an equal claim to the assets of this company. And then when we start to generate revenue, we're going to increase the equity section, but not in the investment side as we would for like a partnership where we would increase the capital accounts in proportion to the agreement. We're going to separate the two and increase the revenue side of the company, what has been earned over the life of the company in retained earnings, minus what has been given to the owners in the case of dividends. We're going to separate that portion of equity and the investment portion, what the investors purchased the stock for. For more accounting information and accounting courses, visit our website at accountinginstruction.info.